Yesterday, I saw that there was a Fed cut, and I didn't know exactly what that means as far as real estate goes. A lender versus somebody that might be looking at a first time home that they want to get into. Can you watch this clip and then tell me what you think about it?
Tonight, the country's central bank making a long-awaited pivot.
With downside risks to employment having increased, the balance of risks has shifted.
Fed Chair Jerome Powell announcing a quarter-point rate cut, the first in 9 months, and putting the focus squarely on the softening U.S. labor market. Powell seemingly less concerned than before about the risk of a return to runaway inflation, even though price increases have accelerated over the past 4 months. Powell acknowledging challenges for the overall economy.
There are no risk-free paths now.
Markets closing mixed for the day as the Fed indicated 2 more cuts are likely to come this year, impacting everything from mortgage rates and auto loans to credit card interest.
In my view, Chair Powell indicated that he's caught between a rock and a hard place.
So, Christine, rates are coming down. What is the immediate real-world impact for families at home?
Well, Tom, in anticipation of today's cut, mortgage rates had already dropped to their lowest level in 3 years, with demand for refinancing spiking. And that could continue, Tom, if the Fed cuts interest rates further, allowing people cheaper access to borrowing money.
Okay, so I heard quarter rate cut, so 0.25.
0.25% of an interest rate, yeah.
That is generally what banks and other institutions can borrow money from the Fed.
Yes, that quarter rate point means that banks and institutions now pay less to borrow money.
And then they obviously don't directly pass it on point for point.
Correct.
Right? Because they got to make money.
Absolutely.
So just because Powell went down 0.25 does not necessarily mean that we will see a direct 0.25
That's correct.
interest rate cut.
That's correct. It's the banks and institutions will be able to borrow at a cheaper rate. They should pass that savings on to us, the ultimate consumer. They may pass it on 1 for 1, which means a quarter per quarter. Some banks may pass more on. I mean, there's banks out there right now that are paying people a higher interest rate for their savings in their money markets in order to attract more customers. And there's banks that may not pass any of that rate cut on.
No.
But the rate cut is not directly tied to the mortgage rate.
Okay,
it's
so
not a 1-for-1 correlation.
It's because it's not a 1-for-1. I mean, you still have to do your shopping and your research to make sure you're getting the best rate. But just because there's a big announcement about a rate cut doesn't mean that it is directly now going to impact you.
Exactly.
With all the things that you might already have.
And evidence of that is the mortgage interest rate actually went down prior to the Fed even announcing a rate cut. Now, people may say, yeah, but they knew it was going to come. Well,
but they didn't know.
They didn't know how much it was,
yeah.
And they wouldn't have gone all in, out on the line to say this. See, mortgage rates are more closely tied to what investors want to see as a return on their risk.
Okay.
They bundle the mortgage rates into a package. They sell them on the open market, much like the bond market. People have to buy those. And
there's got to be a demand.
There's got to be a demand, and investors want a return on their risk. And these aren't short-term rates; they're 30-year mortgages. So you're tying yourself into a 30-year
lock-in
rate. Yes,
yeah.
It can be bought and sold, it's going to be bought and sold. But that just proves that it's not directly tied in. Now, what the interest rate cut does do, as it relates to the housing market, in my opinion, is it allows builders to borrow at a cheaper cost.
Oh,
so builders can now go get construction loans at a cheaper cost. They can buy more materials at a cheaper cost.
Like stretch their dollar.
Yes. So the supply should increase if builders can borrow money at a cheaper cost. The inverse of that, though, is now that mortgage rates have been cut the day before the Fed
okay.
came out, but mortgage rates have been cut. People looking to buy a home can afford more of a home.
Makes sense.
People trying to sell a home
Right.
can now raise their prices because their potential buyers can afford more.
Sure.
So it's good for the home buyer. They can afford more because their monthly premium, their monthly rate is lower. It's good for those people that have been wanting to sell their home that they're living in because
be able
now
to
they can increase the price.
Price, right.
But I think what you saw, the biggest immediate change is people that are currently in their home that want to refi their existing
Right.
loan.
That was the other question I was going to ask. Yeah.
So you've got several things in play here, but I think the biggest immediate impact, and they pointed it out there, people that have existing loans that they've gotten in the last 3 years, immediate spike in demand to refinance those loans. You might think 1/4%.
Or it makes a difference.
1/4% over a 30-year fixed mortgage is a huge amount of money. So the biggest impact, though, is if you're looking to refi, this is the best time to do it. If you're looking to buy, hey, the Fed didn't give it to you, but mortgage interest rates have dropped. If you're a seller,
You can increase the
tick that price up.
price up a little bit because now people can afford it.
Absolutely.
The buyers. Okay. And if another rate cut comes, you know, the bigger, the next rate cut, let's say it's another 0.25, it is an addition, right? It's whatever it is. Okay. So if it does it twice, we could get a full point or 1.25 by the end of the year.
Very
it's
unlikely.
possible.
Very unlikely, but it is
Unlikely.
possible.
Okay. So if we anticipate 2 more, should people wait to refi their mortgage, or should they do it now and then potentially again in December? Because you got to pay points up front. So do you wait it out?
I mean, if you're thinking they're going to cut rates again, you might want to wait. Again, it's not a 1-to-1 correlation. So even if they came back and dropped it 0.5%, doesn't mean you're going to get a 0.5% reduction in a mortgage rate.
Yeah, but it's a chance.
It's a chance.
A little bit of a gamble if you think it's going to, get cut again. But you don't want to do it now and then have to do it again in such a short period of time because of whatever points or stuff.
Your closing costs, your appraisal fees, the fee that you pay for the person that's refinancing your loan.
Do the research and make sure you look into your banking institutions and other institutions that do lending to see what's best for you. Okay. All right. Well, that makes sense. Let us know if it makes sense to you. Makes sense to us right now.
At least today it does.